Hi, my name's John Lane, and inside this envelope is a single piece of paper that reveals a dirty little secret the government jurisdictions hope you never find out about. The piece of paper inside this envelope is worn out. It's got coffee stains on it. It's even torn around the edges. But the unusual secret on this worn piece of paper made me over $139,714 in just 4 months from tax sales, without ever going to a tax sale auction or buying a single tax lien or tax deed. Now, you've probably already heard about how to make money with tax sales by investing in tax liens and tax deeds. And tax liens and tax deeds are a fantastic way to make a lot of money. But that's not what this secret loophole is all about. This is a completely different approach to tax sales. This secret loophole is related to tax sales, but it's a way of making money with tax liens and tax deeds I guarantee you've never heard of or seen anywhere else before. Again, let me be completely clear. This is related to tax liens and tax deeds, but it's a way of making money with tax sales without ever buying a single tax lien or deed. That's right, you make money from tax sales without ever buying a single tax lien or deed or even going to a single tax sale auction. And you make money fast, almost overnight. I don't know about you, but I want to have cash in my bank account right now. And I bet you probably also want to make money right now instead of 1 or 2 years down the road. And that's the goal of this video, to show you how to make money right now, not in a year from now or even 2 or 3 months from now, but right now. The truth is, I'm going to show you how to get your very first check from tax sales in your pocket within weeks or even just days after watching these videos. Because unfortunately, with the way the economy is right now, there are a lot of honest, hard-working people who are really feeling the crunch. People who have lost their jobs, who have no idea where their next paycheck is coming from. People who are living on credit cards and getting further and further into debt. So if you're low on cash right now, you're going to love this, because I'm going to show you how to make money with tax sales fast, putting cash in your pocket within weeks or even days. I'll show you step by step how I do this, how some of my students are doing this, and how you can also do this right now. In fact, you're going to learn how a 28-year-old retail store worker used the secret tax sale loophole inside this envelope to get a check for $23,400 in just 25 days after learning the secret. And he did it with less than 12 hours of easy work. And he started with zero money. He never went to a single tax sale. He never bought a single tax lien or tax deed. 2 weeks later, he got another check for $15,600 with just 2 hours of work. And you can do the same once you know what's on the piece of paper inside this envelope. That's the goal of this video, to show you how to make almost instant money with tax sales right now. How to get checks sent to you by the government counties time and time again. Checks for $5,000, $10,000, $15,000 or more. And you could get your first check less than 30 days after watching these videos. But you're also going to learn about a 12-minute phone call I got while sitting on my porch in Steamboat Springs, Colorado, that made me $67,000 in 2 weeks. And how that same phone call led me to discover the secret tax sale loophole that made me an additional $139,714 in just 4 months. The best part is you don't need any money whatsoever to get started. You don't need any credit. You don't need any real estate experience. And you can get your first check in your pocket in 30 days or less after watching these videos. I guess it's time to introduce myself. My name's John Lane, and in just a few minutes I'm going to open this envelope and show you the tax sale secret the government counties hope you never find out about. Now, you may not have heard of me because I don't do infomercials. I'm not some big-name guru, but my company is TaxSaleList.com, and we're the largest provider of tax sale data in the United States. In my 18-year career working with financial institutions, I've purchased 77,000 tax liens and tax deeds, totaling more than $172 million. That's more than any other tax sale educator in the country. Now, you probably have already heard about how to make money investing in tax lien and tax deed certificates, and tax sales are one of the best ways to make money in real estate. But like I said earlier, that's not what this secret's all about. This is a completely different approach to tax sales. It's related to tax liens and tax deeds, but it's a way of making money with tax sales I guarantee you've never heard of or seen anywhere else before. In fact, as far as I know, I'm the only person in the entire country who's teaching this way of making money with tax sales. And to be honest, I'm a little embarrassed because it's so simple. Even if you didn't finish high school, you can do this. In this free video series, you're going to see just how simple it is. And you're going to see actual real-life examples, step by step, from start to finish. And once you see just how much money you can make almost overnight, you're going to want to get started right away. But before we start, I just want to say I'm not a professional actor or speaker. That's got to be apparent. And sometimes I might stumble over my words a bit. And this isn't some fancy pants Hollywood video production like you see on late night TV. It's just me and my camera guy, Mark. But that's not important, because what is important is right now I'm going to show you the worn piece of paper inside this envelope and reveal the tax sale secret that made me over $139,714 in just 4 months from tax sales, without ever going to a tax sale auction or buying a single tax lien or deed. I'm going to show you how you can do it too. Okay, let's get started. Hi there, it's John again. We're in front of the city and county building, and I'm going to show you what's in this envelope in a second, but this is where everything takes place. In jurisdictions all over the country, the exact same process is gone through in each one of these jurisdictions. What we're talking about is counties get their money to pay for everything, to pay for the police departments, to pay for the court system, to pay for the water department, to pay for the utilities that they provide, the schools, all the city services. They get that revenue from property tax. So although we aren't specifically talking about tax sales here, tax sales, as we said before, are very definitely involved. Now, what happens in a tax sale? If you don't pay your property tax, the jurisdiction has got to get that money. They have to collect that money some way. And there are basically two major systems that they use here in the United States. About half the states sell what is known as a tax lien. Now, a tax lien, what happens there is they hold an auction and an investor comes in and pays the property tax for the property owner. The property owner has a period of time called a redemption period to pay the investor back with interest. And if he doesn't, the investor gets his property. The other system is called a tax deed sale. And in a tax deed sale, what happens is the county sells your property, period. You move out, whoever bought it at the auction moves in. That's basically how this system works. Now, we're here in front of the city-county building, and it's in buildings like this all over the country where they're trying to keep the secret of what's in this envelope from hardworking people like you. I'm going to open this envelope and I'm going to explain exactly what's involved here. So let's go ahead and do that. What this list is, what this secret is, this is a list. In fact, this is the first list I ever got of tax sale overbids. Now, what's a tax sale overbid? Every time there is a tax sale, there is the opportunity that the property sells for more than the taxes owed. In tax deed sales, they sell the property to the highest bidder. Let's assume it's a $100,000 house, but the taxes owed are $2,000. An investor would come in and be delighted if they could buy that property for $50,000 or $60,000. Well, let's assume they bought it for $60,000, but the taxes owed was $2,000. The overbid in that case would be $58,000. Now, in a tax lien sale, not every tax lien sale, but an awful lot of tax lien sales, you have the same thing that happens. They sell the lien to the highest bidder. Again, it's a $100,000 property, the taxes owed are $2,000, and the property sells for, let's say, $63,000. If it's sold for $63,000, there is $61,000 of overbid. Now, what this list is, and you can see the coffee stains and everything on it, this is the very first list that I ever got for overbids. this was the start of getting me on a process that made me well over $139,000 in a period of 120 days. Now, why is it that the county doesn't want you to know about this? It's very simple. You see, the way they've got a lot of pull with the legislature. And so what they've done is they've set up the law that even though this money is owed to the property owner has to claim it. And if he doesn't claim it within a set period of time, and that period of time varies by state, if he doesn't claim it within a set period of time, they get to keep it. So what do they do to notify the poor person that, has been thrown out of their house, that they have $61,000 coming? They send one first-class letter to where he used to live. And think about it. You've just lost your house. You probably had a lot of other financial problems. So the property owner doesn't run down and fill a change of address form out as soon as he gets thrown out of his house. He never gets the letter. There are literally millions upon millions of dollars every year that are put into overbid accounts held by these jurisdictions to, in theory, pay out to the property owner. But if the property owner doesn't claim it, they get to keep it. And what we're going to do is show you how you can find those property owners, how you can claim their money for them, and make a percentage of what you recover for them. Now, let's go through a real simple example. Let's assume you live at 123 Main Street, Anytown, USA. You owed $2,000 on your property taxes, but you were having a tough time and you couldn't pay the taxes. So they sold the property, and they sell the property for $48,000. That means that they have $46,000 of your money as the property owner that you're entitled to. But unless you claim it, they're going to keep it. And in most cases, all they're going to do to tell you as the property owner that you have that money coming to you is send you one first-class letter. Now, what I did was I found these people who had these claims coming to them. They didn't know they had the claims coming to them. They'd never been notified. I found them using the procedures we were talking about, made contact with them, got an agreement with them that I would claim their money for them. I made a percentage of what I recovered. They got a lot of money. They were very happy, and I made a nice profit. Okay, that's what this business is about. It's about tax sale overbids. Now, tax sale overbids, they don't want you to know about them because they get to keep the money if it isn't claimed. But what you're going to do is you're going to help these people who've lost their properties at tax sales to get the money that is owed to them, and you're going to make money while you're doing it. You're not only going to be helping people, but you're going to make a very good profit at the same time. Okay, we're going to head back to the office now, and I'm going to go over some things with you at the office, give you a little more information, show you exactly how you can do this business to help people to get money, and you can be getting checks within a couple of weeks to even a few days from the day you start. Let's go on back to the office. Yeah, it's really interesting how I got involved in this whole overbid, unclaimed funds area. I was sitting on my porch at my office in Steamboat Springs on a summer day. I had my portable phone outside. I had my portable computer outside, and I was right on the Yampa River, and I'm watching people fishing and tubing down the river, and I get a phone call. And the individual says, "Is this John Lane?" And I said, "Yes." He said, "Did you used to live at 11900 Tahiti Way in Marina Del Rey?" And I kind of said, "Who the heck wants to know?" And he went on to tell me that he made his living finding people who had unclaimed funds, and that I had $67,000 coming to me. And I'm a bit of a skeptic, and I said, "Okay, what are you selling?" And he said, "I'm not selling anything, it's true." And he, I was flabbergasted. And I said, "Well, okay, if it's true, what's it from?" And he said, "Well, until we come to an agreement, I'm not going to tell you, but I get 10% of what I recover, and he was working on a claim that was in California, and California had a 10% limit on that particular type of claim. And I said, oh, I don't have a problem. You get me $67,000. I don't mind paying you $6,700 of it. And he said, did you used to work at Merrill Lynch? And I said, yeah, I did. And he said, did you have some Merrill Lynch stock? And all of a sudden, I went, oh my God, I can't believe it. I had gone to work for Merrill Lynch, and I'd done fairly well. I worked hard, and when they went public, I was allowed, as part of the public offering, to buy 200 shares of Merrill Lynch stock. Now, this was 1970, and I was getting this phone call in 1997. Under California law, the office that I'd worked in hadn't had any contact with me for 5 years, so they had to turn those 200 shares over to the state of California. Well, over the 20-some years that went by, those shares split 2 for 1, 2 or 3 times, and eventually the state of California sold the shares and just held the cash. When they did, it was $67,000. So he got me a check, $67,000 minus $6,700, and I was in the tax sale business by this time, and I started thinking about tax sales. And I said, wait a second. These properties sell for more than the taxes in a lot of sales around the country. What happens to that money? And I started doing some research, and I discovered that money is supposed to go to the property owner. But in reality, in most cases, it doesn't. In most cases, it's unclaimed, and the taxing jurisdiction gets to keep it. Unlike most unclaimed funds, which are turned over to the state treasurer, these real estate-related claims are held by the taxing jurisdiction, which is generally the city and the county level. And so consequently, it doesn't get turned over to the state, and the only way you're going to even know you have that money coming to you if you lost your property is if you happen to put in a forwarding email address and you actually got the letter that they send you. So when I had finished the research and realized that there were hundreds and hundreds of people, thousands of people that had claims around the country that were large claims. They were, $30,000, $50,000, $100,000. I've seen claims as high as $225,000, $230,000, and these folks aren't getting their money. I realized this was a tremendous business opportunity. Okay, now we're back at the office now, and you've had a chance to understand where these overbids are coming from. Now, what I want to do now is I want to get on my computer. I've got some screen capture software, and I'm going to show you. We're going to go out and find some of these claims that can be made. And there are literally every year thousands upon thousands of these claims that originate from tax sales. They vary from very small amounts to literally hundreds of thousands of dollars. So what we're going to do now is we're going to get on the computer and we're going to go find some actual claims that are out there and are available right now. Okay, this one looks like it might be interesting. Property address we want to write down. That's the address. Owner's name and their address, we'd write that down. Here was the minimum sale price. Here was the bid. So the surplus is right here. That's how much surplus there was. Now, in this case, it was claimed already, but it didn't redeem, so that would be one of our targets. It hasn't redeemed. That's a pretty good sized claim. That's $45,000. Let's look at the next one. Again, we've got a minimum bid of $15,000, a
$60,000 overbid means there's $58,000 in surplus. We'd want the property address. We'd want the owner's name. This is a claim. It didn't redeem. This is a claim we would be looking for. That's $58,000 claim, folks. Okay, let's look at the next one. Next one, we have pretty much the same thing. $1,700, $50,000 bid. We'd write down the address, the owner's name and address. Up here, we need this information because we want to find these people. So we want their address that they had, where they lived. That's what we're going to use for our search information. The property address is good to have, but quite often they'll be the same. In this case, they aren't. Here we had a surplus, $48,000. Didn't redeem, so we'd look at going after that one. Ooh, this looks like a really good one. We've got here the property address. Whoops, sorry. Property address and the owner's address is the same. We've got to get the name, we got to get the street address, county, city, etc. 3482, it sold for $90,000. Now, you might say, why did it sell for $90,000? Well, look at the assessed value of the property. Assessed value of the property is $139,500. So at $90,000, they were still bidding well below value. It didn't redeem. There's an $86,000 surplus there. So that's the type of thing we're looking for. There's some big surpluses you'll find. Okay, this one looks like we've got something to work on. We want property address, we want the owner's name. Property address, owner's address is the same, that's nice. Okay, what was the minimum sale price? That was the minimum sale price. What did it sell for? Sold for $125,000. There's a surplus on this one of $120,669 and it didn't redeem. That is a great claim to work.
Okay, we've had an opportunity to see that there are claims out there. And there are thousands of claims out there every year. There are new claims every year, and you can make money from all of them. But how do you make the money? Well, the claimant who's owed that money doesn't know he's owed that money. And if he doesn't claim it or she doesn't claim it within a set period of time, then the jurisdiction gets to keep the money. So what we're going to do is we're going to contact that claimant and we're going to come to an agreement with them and we're going to get a percentage of the money that we recover for them. Now, there are three steps in how you do this. And they're all very simple steps. The first step is we got to get the claims. And we already have seen that we can do that. We can do that on our computer. The jurisdictions are required to keep these lists of claims. Now, sometimes because they get to keep the money if it isn't claimed, they aren't real anxious to publicize the fact they have those lists. But there are all kinds of ways you can get the list. The easiest one is asking for it, and quite often they will give it to you. And there are other ways that you can get it, which we'll go into. But once you've got the list of claims, now you have to find the people. Now remember, they aren't living where they used to live, but you have their address, you have their name, and there are all kinds of tools on the internet that are going to let you find those people. Now, once you find the people, you come to an agreement with them, you get certain papers filled out that you need to get filled out, and then you go and you file the claim with the jurisdiction. Now, the jurisdiction sends you the check. Now, let's assume it's a $100,000 claim, and you've come to an agreement with the claimant that you're going to get 25% of what you recover. That means the jurisdiction is going to send you a $100,000 check, which you're going to deposit in your account. Then you're going to write the claimant a check for $75,000, and the $25,000 you've made stays in your account. And in most cases, it's a very quick process, and you've turned around and taken somebody who didn't know they had any money coming to them. You've gotten $75,000 put into their pocket, $25,000 put into your pocket, and in most cases, you've worked 3 or 4 hours to do that.